do love Five Below. That is like one of. Do you go there with your kids? Are they?
I don't.
Oh, you need to take them. God, are you
My
kidding?
wife might,
She
I
should.
don't talk about it much.
Five Below. It's the best store ever. Everything there you never knew you needed.
Yeah.
It's crazy. They've got like fitness stuff.
We're discussing Jenny's
Obsession
with Five Below.
I love Five Below.
You
Well,
should
we're
be a
live.
commercial.
Yeah,
We are on now?
Yeah.
We are on now.
We are live.
So, I was going to say, how's everybody doing? But then I was like, don't do that, because we just talked about last week how we were.
See, I'm not waving like I always do.
You want to, though, don't you?
It's
Your
the
hand
hand
is like,
is
is wanting to raise
I
and do
almost
this.
did just now. But
Yeah.
I'm not supposed to.
Well,
Feel free.
no,
No,
you
no,
can.
please, do
So after you go back and you start watching yourself, you realize these little things that you do all the time.
Quirks,
Others might
if
find
you will.
annoying.
Yeah.
And every time I do this hand wave, and I'm like, stop.
Yes.
You look ridiculous.
Yes, that makes sense. Yeah.
It's, it's like when you listen to yourself recorded too, you hate your
Yeah.
voice
Oh, yeah.
and like all the nitpicky.
You get used
Yeah.
to it after we've done this.
Should we introduce our special guest star?
Why would we do that? Let's just keep talking and going. And
There we go.
What? I don't see anybody. What special?
we don't have a special
I mean,
guest.
I'm here, but I'm usually here, so.
Yeah. So, we do have a very special guest today, and I'll let Jenny do the intro here.
Or we could let him intro himself.
Oh, sure.
Please take over. This is Ryan, everyone.
There you go. Ryan Sibley with State Bank. It's that simple.
It is that
There
simple.
you go. Good to be here.
He's
Yeah, short to the point. I like it.
Yes,
So.
yes.
He does a great job. So if you would like contact information after we're done talking today, please reach out to one of us. We'll be sure to get that to you. I've worked with him several times, and amazing lender, very knowledgeable, very good at what he does, and
Thank you. Thanks.
that's why we invited him.
You're
so
better
we
about
could.
bragging about me than I am about
See?
myself.
Well,
so
I
She's
mean,
good
you
about
don't want to brag about yourself.
Yeah,
I mean,
yeah.
some of us
It's
will.
usually-
I have no problem bragging about myself all the time.
I just saw DeSalin says special audience is watching. So,
Oh, special audience. I
so
like special
DeSalin
audience.
did a transaction with me, so it's good to see you on here. Also, Charlene, my I guess kind of mother-in-law
Yes.
to be maybe. So.
Ish.
Nice.
So anyway, and then a friend from high school. So hello everybody.
How's everybody doing?
We like to do like the romper movie.
Oh,
I
Shanti.
see Tammy and John.
Yeah.
It's kind of so
You're too
I
young, you probably don't remember.
it's
that.
kind of creepy though. I think when that happens, like because I know when I pop on a video, someone's watching, and then they say hi to me. I'm like, oh god,
I gotta go away.
gotta get
It wasn't me.
They know I'm watching. Wasn't me.
So today, we brought Ryan in to talk with us. It's a popular subject. Everybody wants to know about lending and whether or not they can qualify for a home and do they have enough money saved and all of those kinds of things. So Ryan brings some special, knowledge and programs that I think is very beneficial for a lot of people who's considering going down that path. So with that being said, maybe kind of start off with a little bit about State Bank and
Yeah.
what kinds of things you can do to really help people.
Sure. Absolutely. So I've been with State Bank for just about 2 years now, and before I was there, I worked for a larger, regional bank, and came to State Bank in large part because of the loan programs that we can offer.
Mm-hmm.
So our bread and butter is kind of your normal conventional FHA and VA financing. But then we also offer construction loans. We have a very competitive renovation loan program, which is not the FHA 203K.
Oh.
If you've ever dealt with that program before, it can be a bit of a nightmare.
Yes.
So ours is a portfolio renovation loan that's competitive in the market. We'll also lend on non-marketable condominiums. We can do land loans when a customer's purchasing land to build on.
Okay.
And like I said, FHA, VA, and conventional financing. And we offer the Home Possible loan, which is a 3% down conventional loan for customers who meet certain income requirements. And I think today we were going to talk a little bit about Welcome Home, the $5,000 Welcome Home grant.
Yeah, I have a lot of clients that ask about down payment assistance.
Yep.
Yeah, everyone. It's like lending in and of itself. I think is this mystery.
Uh-huh.
Everybody hears these terms, hears these words, but no one has a good grasp on what it is. And quite frankly, it changes a lot too. I think
Yep.
it does. I mean, programs changes. So the biggest, down payment assistance.
And what we tell people when they start their search, get your pre-approval. And so lenders will help you get your pre-approval, and they go over with you the best program for you.
Yep.
I mean, that's, you know.
Yeah, for sure.
So you just sit and like you'll have like a conversation with them, like in person or on the phone, and talk to them about, you know, what program is best for them with the money that they have saved or if they don't have saved.
Don't. Typically don't.
Yeah.
Typically I think people, well, and I think that the biggest thing is everybody still thinks they need to have all these thousands and thousands and thousands and thousands and thousands of dollars. So, do you just do the one? No, because you do OFA as well, and that's a big one that people hear about as well. So, so why don't
So let's start with, so typically how much, so if someone's buying, you know, FHA is 3.5%, right?
Yep.
So that's kind of like the standard bearer for someone who hasn't saved, you know, like a 10 or 20% down payment, right?
Somewhat. You can also, that Home Possible program that I talked about is, that's a conventional loan with 3% down.
Right.
And if you have generally a 680 credit score or higher, Home Possible will be more competitive for the buyer than FHA. But yes, the 3.5% to 3% down payment rate.
So for using round numbers, say you're buying a $200,000 house, you're talking 6,000 to 7,000 plus closing costs. So, and that's generally a minimum, right? So then that's where these down payment assistance programs can be very helpful for people. If you don't have that much money saved, you want to get into a home, you know, so this Welcome Home program, I'm assuming, can help defray those costs. So why don't you talk a little bit about that?
So Welcome Home is it's a little bit unique because it's strictly a $5,000 grant, and it does not affect the type of financing that you get. So OFA is a competitive loan program for sure. And, you know, we use OFA quite a bit for customers who need help with down payment. But one of the downsides to OFA is that sometimes the interest rate can be a little bit higher.
Okay.
So with Welcome Home, you get you know, the same interest rate. If you do Welcome Home and couple it with a Home Possible loan with a 3% down payment, again, when the credit score is 680 or higher, you'll get the same interest rate that you would get as if you made a 20% down payment.
Oh wow.
So there's no, we call them loan level price adjustments. There are no loan level price adjustments, so the rate is the same. There is some mortgage insurance involved, which we can talk about, but the rate's the same. And then when you couple it with the Welcome Home grant, that $5,000 can go towards down payment and closing costs. It requires that the buyer have $500 towards the transaction themselves.
Okay.
300 of that can come from a gift from a family member.
Wow.
So 200 has to come from the buyer.
Huh.
And it generally rolls out March 1st. So like right now the timing is good because it rolls out March 1st. The Welcome Home funds they're usually reserved by like the middle of March.
Oh, wow.
By the end of March it'll be.
So they
So
go
get ready.
Yeah.
Do they have, does it have to be only first time home buyers?
It does
for this?
not. No.
Anyone
not
can.
Yep.
And
Anybody can. You have to meet the income requirements. Which
Okay,
is
right.
A maximum of 80% of the area median income, which is going to be around like roughly $60,000. We're still waiting on the
For an individual or for, if it's a married household, is that per household? Okay.
Okay.
So 60,000 approximately for your household income, okay?
How do they decide who gets the money? Is it just first come, first serve? Like, do you have to write a contract and go into contract?
It's first come,
So,
first serve.
If someone can't find a house,
No
Yep.
pressure.
then
The
You
best timing would be if you find
Get
a home
looking.
and you get in a contract between like beginning of February
oh,
into like, because say you get in a contract, February 15th.
so you'll know who
and
will be
you're
able to
closing
use
at the
it.
end of March.
Okay.
On March 1st, we'll go in and reserve the funds. So you'll be,
Okay.
you'll have a head,
A head
Is it
start.
something that you can
That's
count
good
on
advice.
though? Like that's what I wonder. Like if someone didn't have
Well, that
Is
was
that my phone?
Sorry.
I don't know.
no. If someone didn't have the funds, but they're like, if I get the funds, then I can buy the house. So they write the offer,
Yeah.
and it gets accepted, but then they don't get the funds. Is there? I mean, how does?
If you're
Would they
in-
know before?
That can definitely be a bit of a challenge. But if you're in contract before March 1st,
You should.
there really is no good reason why you wouldn't get it. Now, what you could do is use OFA as a backup plan. So if we had a buyer who came through, we could pre-approve them for both, show them the numbers for both, make sure that they had a good understanding of what each loan option would look like. And then as long as they're kind of on the same page with, me and you about the fact that worst case scenario, we might have to use OFA if down payment is that much of a challenge, which I get it, it can be. Then we could use OFA as a backup.
Is OFA only for first-time home buyers?
It's first-time home buyers, or if you're buying in a targeted area,
Okay.
which we could look that up based on listings, or if you're a veteran of the military.
Interesting.
So OFA has slightly different restrictions.
Yeah.
So OFA is this Ohio Housing Finance Agency or authority, and so that's just another one of the programs. So the Welcome Home seems like some lenders get this grant funds to provide to clients meeting these qualifications. So on 60,000 as an income, assuming no other debt obligations, how much money for a home would that qualify you for approximately? I guess?
Well, if there's no other debt and you make $60,000 a year, that's about $5,000 a month. So 45% debt ratio is generally kind of where you need to be or lower. So what would that put us at? Like $2,250 for a mortgage payment, including tax.
Wow, you could get a
pretty
nice house for that.
expensive, house for that. So, and usually people have a car payment or student loans or something too. So, we'll post some information about how you factor what your debt to income ratio is, because I think that's obviously a very important part about how much you're going to qualify for. And there's a lot of factors I think that go into your loan. Beyond these things, and maybe what are some of those things that people should be thinking about? You've got your debt to income, which is, maybe explain to people what that is.
Basically what an underwriter is going to do is take the gross monthly income and divide it into your fixed monthly debt payments, which is like car loans, student loans, the new mortgage payment, anything else that might be owed to a bank. Credit cards, then alimony and child support if that's right. So we divide your gross monthly income into that total figure, and generally you want that to be 45% or lower. On some scenarios, up to 50%, you can still get a loan approved, and we kind of know that up front when we run it through an underwriting system at the beginning of the process. But so that's debt ratio. Then you have your minimum credit score requirements, which are different depending on the loan program.
And is there some place there's a lot of these places out there people can go get like a credit score. Is there some place you would recommend that's maybe, if they're just kind of, they get one free year or something, is there one that's recommendable that's more along the lines of what you would use? Because I know they can fluctuate and vary.
So in my experience, if a customer pulls their own credit, like Credit Karma is kind of the most popular one that I see, but I will tell you that literally every single time the credit score is different than what we pull.
Significantly?
Yeah, sometimes.
I think they're right on that verge too, because they're like, oh well, I'm finally at, so 580 is what usually you can get approved with, but
for this program's minimum 680.
680
for Home Possible. It
for
can
the
go.
Welcome Home.
No, that's for a Home Possible. Welcome Home does not have a minimum.
Okay.
Home Possible, your pricing is just better. You get a better rate if you're 680 or higher. But you can still get approved, if it's lower than that. But sometimes FHA becomes more advantageous.
That's good. I'm glad you clarified that. And then, so what other factors, are you going to look at other than these, those ones you mentioned?
Can I talk real quick about the credit report first?
No.
Sorry.
No.
So, annualcreditreport.com is the website that's put on by the Federal Trade Commission, and so that's the one that basically you can go to and pull your credit once a year. And I wouldn't necessarily, again, for scoring purposes, I don't know that that's going to be great, but really the best way to find out your credit score is to talk to a lender and have us pull it, because that'll tell you kind of exactly.
And will that vary from lender to lender, that number even, or is that pretty consistent?
It should be exactly the same from lender to lender. Now things can change. Like say if I pull a credit report today and somebody else pulls it tomorrow, and now there's a small balance on a credit card that was reported in between, it might come up differently.
And is it the truth about mortgages and within a certain window of time of being able to apply at multiple places without getting reductions on your score because of the credit pull?
30 days.
30 days, okay.
Yeah.
Or a mortgage loan.
Yeah, multiple pulls within 30 days for the same purpose.
Yeah. Okay.
Should not impact your score.
Okay.
Nabrea, our good friend Nabrea is watching.
We'll go to Brea.
And she said from her experience, Credit Karma has been off up to 50 points either way, positive or
Yeesh.
negative.
Yeah.
So.
That's a pretty big.
What about my Amex card?
Yeah,
Using
when you
that
get
to-
the free
When,
ones.
yeah,
with
like
their
on your
credit
Amex card, you can check your FICO
Discover
score.
too does.
A
I
lot
don't
of
think-
them are doing that now.
You know, all of those services, they're
They're
not
about the
bad.
same.
They're not bad to like just sort of keep track of
Yeah.
where things stand with your.
Right.
You're going up or down.
Yeah.
It should be accurate.
Yeah,
but the
but
exact number is
Yeah,
not.
the exact number will be different.
Yeah.
But yeah, what I was gonna say was that annualcreditreport.com. When you go on there, you can at least use that to track your credit from the standpoint of like, is there anything out there that shouldn't be? Are there any
Oh,
errors?
really? Okay. Annualcreditreport.com.
Yeah.
And you can check it once a year.
You can check it once a year, or if you want to be,
And
if
it's
you want to check
free?
it more frequently, you can check one bureau, like maybe do Experian the first time, 3 months later do Equifax, 3 months later do TransUnion, and then you can just, if you really want to track it that closely.
And if you have multiple credit cards, I think some of them use different of those services. You could probably look
Yeah.
to see which ones is the service is providing it.
Yeah. Yeah.
Oh. Nabrea said Capital One offers CreditWise for credit tracking, and it's usually the same as Credit Karma. Same with American Express.
And so when
She's
someone
just
gets
our
a
pot of
score,
gold when it comes
She
to
is.
information.
There you go. That's helpful. Yeah.
so when it comes to those scores, a lot of times, lenders will work with them about, tips about how to improve their score. So maybe they come in at, they want that 680 score for the best rates and all that stuff, but they're coming in at like a 630 or something.
Mm-hmm.
Are you able to give them tips on what to do to get that up quicker?
For sure, yeah.
Okay.
We can give general advice in terms of things that we see that would help the score.
Sure.
There I am pointing again. Yeah, I'm already noticing.
See, you're
that.
don't analyze now, analyze later.
Yes. Yeah. I'm in the middle of the video. And then we can go in. So the company that we go through to pull our credit scores, our credit reports, you can go in and actually make like hypothetical changes, and they'll tell you what the score would be if you made that change.
Right.
You can do that.
Yeah.
So if you have maybe lower credit than what's needed, you
Yep.
can do all that and
Like
be able
maybe
to tell
paying
the
down the
client.
balance.
Yeah,
Yeah,
that's right.
credit
Yeah.
card, or yeah.
Okay.
Or opening up a new card, what the
Sure.
impact would that would.
Sure.
Yeah, that's awesome. And that's what's needed, because oftentimes people don't know where they're at. Sometimes they get a surprise that it's better. That would be me.
Yep.
And then sometimes, just, hey, if you pay this off, then
Well, I
this can
think-
happen. And
Sometimes just pulling your own free report will help eliminate surprises, because I think probably some people have not done this before or not for a long time, and then you realize there was a medical collection or something from years ago that
Yeah.
you forgot about, or
maybe you missed a payment.
or somebody made a
or-
mistake and they misreported something. So getting that stuff, so like I'm sure it would cause a problem. You get into contract on a house, this stuff all comes up, and then you need this down payment assistance. Now you're probably putting yourself in jeopardy, I would assume, of
Yeah.
not getting that. So
Yep.
eliminating those surprises, I think, is important where you can.
Nabrea has a question. With first-time home buyer, is there a certain time period that would be best to pull your own credit score? For example, before getting pre-approved or before closing?
So those don't impact your score, right? So if you're doing the free,
If you
or
pull
she's
your,
looking for to figure out surprises and stuff. Like,
Are you looking to find out surprises?
well, I guess just in general. can you
Also,
speak to
during the
that?
home buying process,
Yeah.
could your score potentially be pulled more than once?
within
It
90
is,
days it
isn't
won't
it?
be.
Oh.
Yeah, within 90 days it won't be. Some lenders today, and we're doing this, we'll do a soft pull before the closing to make
Mhm.
sure that no new accounts have been opened.
Yeah, and that's
But the
where you don't
score-
want to go shopping.
Yeah.
Or
Because,
go buy a new car.
oh,
Yeah.
And
Yeah.
even if your lender says it's okay, don't,
Yeah.
don't.
They really shouldn't say that.
I had that happen once.
Yeah.
Don't,
Yeah.
just don't.
Yeah, definitely don't open up new accounts between application and closing. But yeah, you can. We'll do that soft pull just to make sure that no new accounts have been opened. But otherwise, it doesn't affect your score. We're using the score at the time the application is taken.
I mean, I think on the free sites, it's okay to look as a first-time home buyer or any time as a buyer. But just knowing that that's not necessarily going to be correct.
Right.
But the
Yeah, that
annual
won't impact your score.
credit, that one you can do one time, or
For
I mean,
free.
yeah,
we do
for
one
free.
time.
Oh,
yeah.
for free.
You can do one time per year for free.
for free. Annualcreditreport.com.
Yeah.
Yes, she's looking for surprises, so I guess it would be smart
And
to
you
do
said-
it prior to applying for a home
Sooner,
loan.
Yeah.
sooner the better.
You
Give
said the
yourself time to
annual
clear it
credit
up, so.
report.com is accurate. It's what you guys pull most?
Well, no, it's not
Not-
accurate from a score standpoint, but it's
Okay.
it's
Just
like
to
the
see
government
what's
kind of
on
sanctioned site.
your-
I-
okay.
So it would be
Some of the other ones
closer.
are going to be just as good, but it's a good resource
Okay.
just to keep
and
track
that
of
and
your.
it won't impact your credit when you use
Correct.
that. Okay.
Yep. Yeah.
Because people always ask me that. They're always like, "Well, I don't want my credit pulled."
Yeah.
Well, it's ironic that your credit score is such a huge factor into getting approved, but you look at it and that's what gets dinged.
Yeah.
You know, I mean, why is that? That
Well, if
doesn't
you
make
look
sense.
at it, it won't, but if the lender,
If the lender
does-
Well, that's
does,
what
and
I'm
the
saying,
reason-
but a lender has to look at it,
Right.
and that's what's
The reason for it.
for, and
Yeah.
everything is dependent on that, but then you get dinged because you're looking at it,
Yeah.
so.
So your scores are going to range from 350 to 850. Okay. When you get your credit pulled, it's generally 3 to 5
Right.
points. So 3 to 5 points when you do get your credit score pulled. So it's a
Oh.
minor impact.
Oh,
the
yeah,
way
so
that
that's not too
Okay.
bad.
it's
I didn't
Okay,
realize
so
that.
three to 5 points is what happens,
Yeah.
and so
he
not
said that
huge,
it's
but.
open. If you did want to check with our lenders, it's open for
30
around 30
days.
days.
yeah.
So
So
that's
you can
usually
check.
the amount of that's usually how long, I know you guys close quickly, most lenders are 30 days, can you do
Oh
shorter
yeah,
than
yeah,
that?
we can shorten that when we need to. Yeah, but generally 30 days is a good time.
But
frame to
sometimes
do it.
people, they shop. They do shop lenders and loans and to see where, they fit best. And,
Yeah.
people are like, well, I don't want to, I only want to check with one lender because I don't want
well, you don't
my
even need
credit
to, I
keep
think
getting hit.
necessarily, my opinion with people, and do correct me if this is a flawed thought, but have open conversations. If you want to shop lenders, the applications are somewhat cumbersome, I think.
Mm-hmm.
So if you want to shop multiple lenders, maybe could you just have open conversations with them? If this is my situation, I know you can't tell my score from this, but what do you think, kind of thing, without going to 4 different lenders and having to apply with each one, getting credit scores pulled each time, finding out what programs and options and rates and that kind of stuff without going through all of that. I mean, can you do that?
Yeah, for sure. Like if somebody calls and wants to know what a loan would look like based on a kind of a general scenario,
Right.
Here's my credit score,
Yeah.
Type of thing, we can definitely put, we can show them numbers in terms of
Sure.
what that would look like. What you're normally going to find is from one lender to the next, interest rates and closing
Right.
costs and whatnot are going to be very similar. So
Sure.
definitely, doesn't hurt to kind of make sure that you're getting a good loan.
Right.
And then the service you get also kind of comes into play. as
Can
well.
lenders negotiate? Like if someone was getting, I'm getting 5%,
Yeah.
can you go lower?
It gets a little bit tricky because you have fair lending issues
Mhm,
that you have to deal
mhm.
with, and so if you're making exceptions for certain portions of the population and not others, lenders can get
It
into
gets
sticky.
Mhm.
Yeah.
Okay, just it's a question I've gotten asked. So.
Yeah, I'll kind of leave it at that. With that being said, lenders don't want to lose business when
Right. Right. If they can.
yeah.
But they're not going to go down like a 0.25% or something.
If you see a difference in a quote from one lender to the next by 0.25%, there's something going on. Usually it's not uncommon to see maybe 1/8%,
Right.
and then maybe the closing costs are different, and that makes up
Closing
the difference.
costs,
Yeah,
appraisal prices maybe.
yeah.
Other fees. What I find were the biggest, in my experience has been, the biggest differences is usually I find between big bank and like a credit union or a more local bank.
Mm.
And it's what someone explained to me was a bank maybe just like using, one of the behemoths, they don't want to use that loan premium so that they'll make their rates higher, and they'll do it, but they're going to make the rates higher, and if you really want that program, then you'll pay the rate. But
Yeah. Yeah.
but that's where I've noticed kind of like the differences for the most part, like
Yeah.
big differences. So,
Yeah. A good resource on interest rates is mortgagenewsdaily.com.
That's
So
good
that's
to
a
know.
good website to use.
Mortgagenewsdaily.com.
Yeah.
Okay.
It's it's
I'm
like an
gonna put
industry
that in the
website. There's a
comment.
lot of
Mortgage. Newsdaily.co. It's kind of a long one.
Yeah.
Okay.
And tell us, what is that?
Oh,
what What is that website? It's an industry website, so you're going to see a bunch of articles out there that if you're buying a home, you'll see a bunch of articles that you don't necessarily care about.
Sure.
Yeah.
Okay.
Sorry, go ahead.
That's okay, but like on the bottom left-hand side, down at the bottom, they have an article they post every day that gives an update in terms of what's going, like, they call it I want to say it's like the best execution rate, so it's the rate that generally, on a 30-year fixed rate conventional loan, FHA loan, 15-year fixed rate, here's what you should expect based on the market today. And it's good, accurate information in terms of where the market is on rates.
So we'll have, I've been typing the links into my comments so you all can find them. Have you?
I will. I will.
So we'll have them there at some point. Wait, Nebrea had a
Don't
question.
pressure me, I will.
And I'm sorry, I was looking for another anyway, hang on. So Nebrea asked, I would be a second-time home buyer in the future. When buying a home, is it best to have no debt at all to be approved for a larger amount? Example, no credit card debt, no student loans to car loans.
Well, I mean, you have a house debt.
She'd sell. She's selling.
But they'll factor based on the new.
Oh,
debt.
so
yeah.
We should look at, for anybody, we should look at the scenario first before answering that question.
I think she's looking
Before paying anything off.
because
Like, if you have let's say for example, if you have a $400 car payment and you have a 15, or let's say a $5,000 balance on it, okay? And you can pay that, and you're kind of debating, should I pay that car loan off today or make that $5,000 down payment on the new house?
Yes, good.
You're going to get more bang for your buck from a debt ratio standpoint by paying that car loan off.
well, and that's what she's asking. Should
Yeah.
she pay everything off and come in to the table with no?
Credit cards sometimes will have
Standard
like
debt,
really
but-
low payments,
Yeah.
and so you don't get a big bang for your buck on those.
I think
Okay.
it's situation to situation. Like that's what I found out when I bought my personal house is I had to pay off my car because
Yep.
my debt income was so close.
Yeah.
But I had a large student loan debt.
Yep.
So my student loan debt was higher, but they had me pay off my car loan.
Yeah.
Cindy, is that your phone on the end?
I'm this. Yeah.
Okay.
Why?
I saw the comment and I couldn't.
All the comments that I'm
Yeah,
getting.
I'm like, I don't see that.
They're
comment,
all
so that must be
hers.
yours.
I'm typing.
How nice for you.
All comments. Oh, do you,
All
Addie?
the
Do you do Addie? ADDI.
It's the city of Columbus.
City of Columbus. Addie Grant.
I'll be totally honest, I've not worked with that grant.
Okay.
Yeah.
It's just another down payment assistance program. So
I
you
find
know,
that process was so prolonged. It took 2 months to close. Like,
Yeah.
Yes,
Well,
and
that
that
takes a while too.
6
Doesn't it take
weeks,
like
right?
45 days at least, right? Or 60?
No, it can be shorter than that. It's a little better today.
Okay.
You used to have to get like original signatures on a bunch of paperwork with
Yeah.
OFA, and that took some time.
Okay.
They've kind of streamlined. I mean,
Okay.
30 to 45 days is a
Okay.
good time frame. Yeah.
so what I found with Columbus, like this Addie program, you had to, the buyer did their inspection, then the lender did the appraisal. In addition to that, the city
Came
had
and did
someone
another.
came and did an inspection on the
Yeah.
property to make sure it was city worthy. So it's like you had 3 levels of inspections,
Yeah.
and then they wouldn't start the process until they had a complete file for the buyer. So it's like
Did you have the buyer or the seller?
I had the seller,
I did too.
and it was a disaster.
Yeah.
Oh, ours wasn't.
Yeah.
It was
It was
fairly
good?
smooth. Yeah,
Yeah.
and
Well, maybe
as
it was
far
just
as
this instance, but
the city inspection, it wasn't. I spoke with the inspector, told him what was going on with the home, and it was fine. Like he completely understandable. He said he's just looking again for like code stuff, same as anything, and if stuff's
Right.
getting repaired, it's fine and good.
yeah.
And,
I think they just want to make sure that it's not,
well, they're giving money. They want to make sure it
not
won't
crumbling
default
or
and
something.
crumbling.
like it.
Yeah, he and that's what he said. He was looking, so that there weren't holes in the roof or,
Right.
significant.
So any other things you can think of that'd be wise for a buyer to know that we haven't discussed? Someone maybe starting this. What we're finding now is this is the time where the wheels are starting to turn
Mhm.
about the process. Is there any other general, advice you'd give people?
Should they come into the process specifically looking for down payment assistance, or is that like, I think that, again, most people just don't understand the whole down payment, closing, the money that's involved, and they hear about these grants and programs, and so how would you,
So I would, a lot of that depends on the Welcome Home Grant. If you can get approved for that grant,
do it?
do it.
Yeah.
So it's a no repayment. Are there like terms as far as like you have to live in the house for so
There's a
long?
5-year, there's
5
a 5-year retention.
And then no
there's-
repayment if you stay there for the 5 years.
Yep.
And it doesn't impact your credit score, so
Doesn't
it's
impact
truly
your credit
free
score,
money.
Doesn't
Yeah.
impact your loan
That's
program and your
That's
interest
crazy.
rate and all of
Free
that.
money.
That's amazing because OFA, I mean, they're gonna,
Yeah.
your interest
Yeah.
rate's gonna be at least 1% higher from my experience.
Yeah.
Well, and you have to live in the house a certain amount of time as well, otherwise
Right.
you do have to pay
Yeah.
back.
Yes and no.
Oh.
Yes and no. I mean, they do. So few people are required to. It's called what they call this? Their recapture.
Uh-huh.
Okay.
And there was a point in time where OFA realized that there were so few people that actually got hit with the recapture tax, and it was a little bit like people had objections to it.
Oh.
That
Well, yeah.
yeah, for sure. So when you read the document now, they added a line in there that says that if you get hit with the recapture tax, they will reimburse you.
Wow,
So you do have to pay it, but then you get reimbursed.
Wow.
So,
that's amazing. So
That
that's
really
on
is.
OFA.
I mean,
Yeah.
that's
Yeah.
crazy.
but generally, for somebody who can get approved for the Welcome Home Grant, it's a great program for sure. We should try to get them approved, even if they're making a 5% down payment, and we can get them approved for the grant. It helps.
sure.
And that's happening right now. So really, if you're thinking about wanting free money,
You better move. Yeah.
do it now. Yeah.
Yeah. Get the process moving now. Get pre-approved now, and then that way you're kind of out looking at.
And you
homes
said
over the
as
next
long as
month
you're
or
in
so.
contract by like mid-February. So like for
Yeah.
us, with the way the market is and the number of homes that are still for sale being very low, waiting until February 7th to start that process is probably still pushing it in my mind. Like,
Yeah.
So.
Yeah.
um,
Yeah, you probably want to get it started a little bit sooner just
Sure.
so you can be prepared.
Yeah.
And on it, if you got into contract on a home in the first week of March, you would probably still be okay, but nobody can guarantee or make any promises about it.
Sure.
Yeah.
We are at 3,744 active homes.
Which we had got
in
up
the
over
Columbus
like
MLS.
4,000, and then now we're
that is
still-
like nothing.
I was like, that's nothing.
Nothing.
We need inventory still.
I kind of thought, after last year and or when
the way that things
fall
were
and
going
spring,
by the
it
end
felt
of the
like
year.
it was.
I knew
really-
it wasn't. I knew
Um,
it's going to be the exact same as every year.
Yeah, and it's like
we go in hopeful every year. Please, it's got to get more balanced. It's
Well, I
got to
did
get
feel
more.
like more homes were. I mean, even the board report said.
I
more
think
homes
it's
were-
getting more
But it's like
balanced.
the number of people were
I
still out
see
there.
that, but
the
like I
whole
think
time.
that it's still getting more balanced with. I think that levels are starting to prices are starting to level.
Oh, you mean
out.
pricing? Yeah, I just
Yeah.
mean the amount. That it's still going to be
Right.
a seller's
I
market.
partially think because there were a lot of homes sitting on the market for a while, and it just
Uh-huh.
I think there were a lot of sellers who started getting a little bit greedy
Mm-hmm.
because they
Well,
saw
sure.
what was going on. Well, I'm going to press that by 10 grand. Someone
Yeah.
will pay it. There's
Yeah.
no homes for sale. They'll pay it.
Mhm.
Like, yeah. you
And
still gotta
buyers are
price it
getting.
right.
I think they're getting more savvy now, and
Yeah.
so.
Yeah.
What are you seeing?
What am I seeing?
Mm-hmm. As far as buyers coming in and, are they getting into contract right away? Are they, is it a
No.
long
It's a
term?
long process right now, honestly. Yeah, I mean,
It's still hard for buyers. So.
it's really kind of been like that the last, so you go back, 4 or 5 years ago, I felt like if somebody got pre-approved for a loan, generally they would get out looking, and a lot of times within a few weeks they'd be in
Mhm.
contract on something. Now it's, I have customers who I pre-approved, 6, 7, 8, 9, 10 months ago.
Yeah, it's
that
crazy.
haven't found
Just
out.
nothing.
Yeah.
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 Oy.
Yeah.
I don't know what that 3,700 number is, like
It's
what
the
that means
number of
compared to.
active listings. It's
But like, what
normal.
about like in 2015 or 14?
Normal, I think, was in that
Yeah.
10,000
Yeah,
range.
yeah.
I mean,
Oh.
we're like a third of normal.
I-
So like,
It's gotten lower and lower and lower every year I've been in. I can't even remember back then. Yeah.
I was lamenting this on. I'm like, I kind of miss the days where you went one day and you looked at 4 or 5 houses, and maybe they'd write an offer on one, and if they did, you'd write an offer, and then a day later you'd get a counter offer, and the next
Mhm.
day you'd counter offer them.
Like, I want to know in 30 minutes.
It's like so fast.
Yeah,
It's
we
like,
need to
there's
know
no
right
waiting.
now.
Yeah,
Is this available?
All right, all right, we saw it. Do you even want
Yes.
to go to the next one? We need
Yes.
to write this now.
Yes.
Like,
Yeah.
So,
Yeah.
so okay. But yeah, so well, thanks so much for
Yeah,
coming.
thank you.
Yeah, thanks for
We'll
having
put
me.
in our
Appreciate it.
comments how you can
Pleasure.
reach.
Mhm.
We'll put in comments how you can
Pointed
reach
finger.
Ryan, so that
Yeah.
if you have additional questions, I'm.
Kind of give them an idea of what you're looking to do, and then
I think even from that relationship standpoint and
think-
knowing who
yeah.
you're working with
Right.
and knowing that the person you work with is, I mean, you don't have to be best friends with the person, but that you can get a feel for your relationship with the
Right.
person. Are they going to be responsive to your questions?
Yeah.
And are they gonna, at the end of the day, help you get this done? You know?
Right, like
Yeah,
you just have
for
to
sure.
start that conversation at some point, and
Right.
a lender is going to walk you through the process and tell you what's best for you.
Yep.
So
Yeah.
you can take some of the scary away.
Yep.
Yep.
So with all that being said, I think we've kind of covered it. Unless anybody else has anything else. they
Cheers,
wanna add.
everyone. We didn't do this at the
Cheers.
beginning,
Cheers to
but
Wednesday.
Cheers.
it is wine
Cheers.
Wednesday.
Oh,
Oh, she's
that's
empty.
nice.
Oh, darn. It happened.
We wanted to get you warmed up with the snow because evidently the white.
The white
Apocalypse is
snowpocalypse
coming.
is coming
Yeah.
again. Or
Yeah, for sure.
Bye, everybody.
Snowmageddon.
Whatever you want to call